Let's talk about a few key factors that impact how much expenses you will pay in a permanent policy. Here we're talking about whole life or index universal life. So let's say we have policy charges or expense. The very first thing that impacts how much fees you will pay in a policy is the net amount at risk, or NAR. The net amount at risk is how much money the life insurance company has to come up with if you pass away. The higher this amount is, the more expensive insurance is, regardless of how old you are. The next factor we'll review here is the cash growth. So why is it important? Because in the previous episode, we reviewed how the cash accumulates in a policy in relation to the death benefit. So whether you're talking about whole life or index universal life, the cash accumulation has a direct influence on the net amount at risk. So this one influences the death benefit, which in turn has an impact on the net amount at risk. The next factor that we'll talk about here is the age. Statistically, the younger you are, the cheaper the insurance is. But now you have to take into account other factors, things such as your gender. Females tend to have lower cost of insurance compared to males. But that's not the only thing in the picture. You also have the risk rating, or the risk classification if you want. Rating or classification. The next factor that is very important here, and this is where it gets a little bit tricky for customers because you cannot necessarily know it ahead of time, is the company that you decide to work with and the product. Not all insurance contracts are equal, and depending on what the company is targeting, the fees and the budget that they have for things such as options, for instance, if you are working with IUL, could be different. As a result, when an insurance company builds a product, they have to take into account multiple parameters, which in turn will have an impact on how much expenses you have in that policy. The last point that I want to touch on here is the premium payment. First of all, if you've been following this series, you'll remember that we mentioned that in general, in IUL products, whenever you pay a premium, there is a premium fee that is subtracted, the premium load. For instance, if you make a premium payment of $10,000, you will pay a fee that will be higher than someone who made a payment of $100 just because of the premium load. But on top of that, one thing that you need to keep in mind is that the premium payment is also linked to the cash growth. The more money you bring into your policy, the more money you have to earn interest and compound over time. So with this, I would like to stop this recording here and see you in the next episode.